So hello everyone, my name is Varad Vinayak Godse and in this video I'm going to talk about DeFi apps. So first of all we'll understand the concept of DeFi or decentralized finance, and once we understand it we'll be able to get what DeFi apps basically are, and at the end we'll also take some examples so that the viewers can better understand what DeFi apps basically mean. So the basic concept of decentralized finance revolves around these 5 key points. So the first is elimination of intermediaries. So in current scenario, you have to rely on some central authorities like banks, and which is governed by the RBI and the government to put your assets or money. So there is this intermediary between your money and you. So this is three-layer process: you, the central authority, and your money. But decentralized finance eliminates this very particular thing, as you can straight away access your money from any wallet or exchange that you put in. There's no central authority where you have to report or ask before taking out your money or putting your money. So it eliminates these intermediary. Second is democratization of financial transaction. So as there is no intermediary, there are no rules or regulations or any strict practices that you have to follow before communicating with your assets or money. So in a way, uh, transactions are being democratized. Then the third point is very important. It is peer-to-peer financial services. So as there is no central authority, you can connect to anyone across the globe in this financial network and make transaction with him or her. So there is no there you don't have to report to any central authority uh, before you communicate with a person which is so far away, or you want to make transactions with him or her quickly. Fourth is blockchain technology stack. So this entire decentralized finance systems are developed on blockchain, where you can view what is happening with your money on different blockchain nodes. And fourth, last and the most important point is crypto token based monetization and trading. So all of the digital assets and all of the exchanges and whatever you do on decentralized finance, it is somewhere based on crypto. So entire management and monetization trading is based on crypto, and crypto are global currencies. They are not bound to any specific country or any specific rules. You can trade these crypto tokens around the globe with anyone, and that makes monetization trading very easy, efficient, and fast. So we also need to identify certain problems of centralized finance that makes decentralized finance better. So in centralized finance, there is single point of failure. So if say for example there's a bank, and the bank faces say any crisis, any financial crisis or technical crisis, then the entire range of people or the entire set of people engaged with the bank are affected in some way. Maybe people will not get the benefits that the bank was offering, or some people may lose money. So this is a single point of failure where the failing or crisis of any particular entity affects larger amount of people. Then the second point is tedious bureaucracy. So as we know, the banks are centralized and governed by, say, uh, governments and other authorities. So there is a certain kind of bureaucracy, and all the important decisions of your assets are made by some other central authority, and which is not in your hand. So this is what is meant by bureaucracy. Then the third point is delay in transaction processing. So whenever we go to a bank or and we want a loan, there is a huge amount of documentation that we have to do, and it is a very tedious and long process. It takes days to just for getting your loan sanctioned in a bank. So centralized finances bring these delayed transactions, while decentralized finance, it's just a matter of few minutes where you can connect to entity and get your loan sanctioned very easily. Or loan is one example. There are many other use cases that can be a part of this. And the fourth is exclusion of large population. So, due to the complex rules, regulations, and documentation, a lot of people don't engage with these centralized authorities to, put their money or, put their assets with them and communicate through them with their assets. So, it excludes a large population, while decentralized finance is very easy to use and it can connect with authorities easily across globally. Transactions are fast, so a large amount of population can be easily converted to decentralized finance easily, and they can also benefit for themselves very quickly. So I've tabulated the differences between centralized finance and decentralized finance. So the first question that arises is who holds your money? So in centralized finance, the finance companies hold your money, while in DeFi you can straight away communicate with your money and you are in charge. Then second question is who exerts control on money, where it goes and how it's spent. So this happens very transparently in DeFi. You know what is happening with your money on blockchain, or all your digital assets are on blockchain and you can view them easily. But in centralized finance, you don't know what is happening with your money. So banks and other central authorities might be doing many other activities, putting your money in stake. Third question is how much time it takes to transfer funds. In centralized finance, as we know, there are delayed transaction. It may take days for transferring funds or making transaction. While in DeFi, it's just a matter of minutes, where you can uh, straight away make transactions globally anywhere. Uh, then who is in charge of your data? So data privacy and uh, flow of your own data uh, is very important topic nowadays. And in centralized finance, these finance companies hold your data, all all kind of data, where you live and all your personal information, your work information. All this personal data is held by these finance companies in centralized finance, while in DeFi you hold your own data. You don't need to share your data with anyone. uh, then the question arises is what is the market time? As you know, centralized finance institutions are have limited duration of work hours. I mean, if you go to bank is open from 9 to 5, so there are fixed durations during which you can make transaction, and that may lead to delays during, say, important situations. While in decentralized finance, it's always open, it's 24 hours open. The values are getting up and down. You can trade anytime, you can make transaction anytime. And the last is level of transparency. So in centralized finance, once you put your money in bank, you don't know what happens with your money, as I mentioned earlier also. So entirely it's, closed. The books are closed. Once you put your money, you don't know what is happening with your money, or what the authorities are doing putting your money on stake. But DeFi is highly transparent. So it is present on the blockchain, and we can easily view what is happening with our money on uh, blockchain nodes, and the level of transparency is very high. There are certain promises that decentralized finance provides to its users. So the first one is efficient value transfer. Second is direct connect between lender and saver. And third is the result of the first 2 points, which leads to speedier growth of processes. And fourth is inclusion and reach. As we know, large number of people can be added to decentralized because the processes are very easy and easily accessible for people. And the last is community governance. Community governance is a result of peer-to-peer network where everyone has equal amount of right to govern the decentralized nodes, the decentralized blockchain nodes. Now we look at the values locked in DeFi. As we can see, the size of DeFi was almost, I mean, it was negligible, $0 in October 2017, and just 4 years after, in 2021, it saw its peak of $100 billion. It has reduced a bit at the end, but it has grown significantly. Now we will focus on some fundamental conceptual terms related to DeFi. So the first is blockchain. So blockchain is basically a distributed ledger or a bridge that serves as a settlement layer for transactions across the environment. The second is digital assets. So these are basically tokens representing a value that can be traded or transferred. So digital assets can be anything, any cryptocurrency, Bitcoin, Ethereum, or any other digital asset like an NFT. Uh, Third is wallets. So wallets are basically interface that help you manage your different digital assets. So if you own three, four cryptocurrencies and an NFT, you can easily manage them using wallets. You can put them all together in wallets, and you can view them there, and it makes your work easy. Then there's the concept of smart contracts. So there has to be certain rules and regulations on the transactions on DeFi as well. So smart contracts serve that purpose. So smart contract basically is a software code that determines or establishes terms and conditions for different transactions. It was introduced by Ethereum. Then there are the D apps. So D apps are apps which are built on all the other concepts like wallets and blockchain, digital assets, smart contracts. So they provide a similar interface, and they act like normal apps when you interact with them, but they are completely based on smart contracts and blockchain. Then there's the term decentralized autonomous organizations or DAOs. So these are entities which work under the rules and regulations established by smart contract. So, for example, a loan has to be sanctioned to an entity or a person. Then these organizations come into place, and everyone gets equal opportunity to vote and decide. So earlier there used to be just one organization, or say one CEO of the bank or CTO of the bank, who would decide whether to give the loan or not. But here it's a community based organization that provides the power of giving away or making the transactions through smart contracts. Then there are the stable coins. So digital assets are a bit volatile. Their values go up and down with time. So there has to be something to which these digital assets can be converted for safety. So those entities are called stable coins basically. And stable coins can be anything, US dollar or gold, any particular value whose any particular coin whose value does not increase or decrease with time. Uh, then the last thing is oracles. So to make transactions on decentralized finance or decentralized platforms, you need certain amount of data. Even if you go to bank, you have to provide some data. So Oracle serve that purpose, and it basically drives together different APIs over the net to generate data required for any particular transaction. So now we will talk about decentralized financial apps. And so the first image basically tells about the centralized financial app system, where when accessed through the internet, the application data is completely stored into servers owned by the service provider, while on the other hand, in decentralized finance, it is peer-to-peer sharing of data, and it's an open source platform where we can see what is happening with our data. Then Ethereum introduced the concept of smart contract, and that enabled many people to create different DeFi apps that solved real issues. So there are certain components that DeFi app development follows. So first of all, you need a good project idea that has some real world use case. Then the wide number of users and people engaged create a network effect. You also need a good amount of developer community to develop your application that will serve to many people. uh, then DeFi apps are made on existing blockchain technologies like Ethereum blockchain or Polygon blockchain. So you also need the knowledge of ecosystem that are built until now. Then each DeFi app has some logic. So logic in form of algorithmic backing and validation must be established. Then at the end, every DeFi app provides service through token transactions, and number of transaction or count of tokens in circulation forms the value locked. Now we will talk about some basic platforms of blockchain. So first is Ethereum, which is a proof of work based platform that has a fixed algorithm that validates the block or transaction on blockchain. It provides a speed of 15 transactions per second. Other platforms include Solana and Cardano, and both of these are proof of stake in which random miners are chosen to validate the blocks. They provide an advantage in speed with 65,000 and 50,000 transactions per second respectively. So the categories of DeFi apps vary from credit and lending, which basically means borrowing and lending money, acts as a bank. Then marketplace, which enables you to buy and sell digital assets. Prediction markets. So prediction market basically means trading the outcome of future events. We predict the value of future event in present, then reward is based on positive or negative outcome of that very prediction. Then investing, payments, and insurance. So now we will talk about some of the apps around credit and lending. So the first is Cred. So Cred basically rewards user in form of Cred coins. So if they make transactions to Cred, then they earn Cred coins, whose value may change in future and they may benefit from it. Then there's an app called Colendi, which is uses ML-based algorithms to track credit scores and lend microcredits with no collaterals. Basically, microcredits are small loans with no collaterals. Then Celsius Network is a company, is a service that provide crypto loans. So loans in form of crypto coins, basically tokens. Uh, you can receive interest for the deposited money, or you'll have to pay interest if you borrow money. Some of the apps in the insurance category are Nexus Mutual. So Nexus Mutual basically provides insurance for smart contracts. So if there are any mutual or technical crisis in smart contract, then Nexus Mutual covers them all. Then there is Etherisk. So Etherisk basically provides many services, and some of the services are crypto wallet insurance, protection from crypto loans, or even flight delay insurance. So if your flight is late and you and the flight company is responsible, then it covers that very particular coverage or insurance as well. Then, talking about the prediction market category, Bodhi Network is a service which mainly focuses on Chinese market, and the outcome or the rewards and this entire sale is completely based on global events, sports, and politics. Then there is Augur, which rewards user if they predict winning outcome. Uh, then talking about different marketplaces, OpenSea is a very famous platform for trading NFTs, and it is a Polygon blockchain based platform. Then there is District OX. It is an Ethereum based platform, and it basically lets users build decentralized marketplace communities on its network, and the deployment is completely free of cost. Then talking about payments, we have Request. So Request basically lets you pay and get paid in cryptocurrencies of payment network including Ethereum, ER20, Polygon, etc. And then Raiden is another service that provide near instant, low fee and scalable payments on Ethereum. I hope I was able to explain the meaning of decentralized finance and DeFi apps in the easiest possible manner, and we would soon catch in a similarly interesting video in future. Till then, bye bye and thanks a lot for viewing till the end.